Hey everyone, welcome to today's webinar, Women in Compliance, the FinTech edition. My name is Amanda Brief. I'm the US Marketing Director here at ClausMatch, and I'm going to be your moderator for today. Before we get started, we just have a couple of housekeeping items. All participants except the panelists are muted. If you have any questions, you can submit them in the Q&A box on your screen. And lastly, an email with the slides and recording will be sent tomorrow. And with that, we kind of just like to share a little bit about ClausMatch. So we're an award-winning regulatory technology company. We help companies manage and automate their compliance processes across the policy management lifecycle. We support organizations from SMB and mid-market all the way to enterprise organizations across insurance, FinTech, and financial services. We have offices in the US, UK, and Singapore, and we support over almost 200,000 users across 65 plus countries. So that's just a little bit about ClausMatch. Now, before we get started, I want to just quickly introduce our speakers and our moderators for today. Joining me as a co-moderator is my colleague, Carol Lemos, our EMEA Marketing Director here at ClausMatch. And then here on the list, you can see our different panelists. We have a great group of women across the FinTech landscape from the US to the UK. And we'll be introducing each of these speakers during their designated topics. Now let's go ahead and introduce our agenda for today. As I mentioned before, we have 6 specific topics related to FinTech. So we're going to be discussing everything from how to build a scalable compliance program, to how to forge collaboration between banks and FinTechs, to discussing how to prioritize compliance for your FinTech startup. And we have a couple of additional topics as well that we'll cover during each of the designated topics. So with that, I'm going to hand it off to my colleague, Carol, to kick off the discussion.
Thanks, Amanda. I'm thrilled to be co-hosting these amazing guests today. For our first topic, we'll have Victoria Martin, who will address how FinTechs should respond to the new regulations under FCA's Consumer Duty in the UK. Victoria is the Head of Compliance and Regulatory Affairs at 10x Banking. Thanks for joining us today, Victoria. For those unfamiliar with the FCA's Consumer Duty, it is all about setting clearer and higher standards for financial services institutions' culture and conduct when engaging with consumers. So from your perspective, Victoria, what are the key aims and objectives of the new Consumer Duty, and how does it seek to provide added customer protections?
Thanks very much for having me today. So ultimately, the new Consumer Duty is replacing the principle of treating customers fairly by adding additional protections to customers. If you look at other jurisdictions such as Australia, they've already introduced the design and distribution obligations, which essentially means that products have to be marketed and also targeted at the right audiences. So essentially, the new Consumer Duty is creating a higher expectation in terms of the care that's taken with regards to customers. And essentially, the new Consumer Duty will be creating 4 new customer outcomes. The first one being communications. So companies' comms need to be clear and enable customers to make informed decisions in a timely manner. Products and services need to be designed to meet the needs of the customers and are sold to those who need them. So essentially, you'll need to have metrics to show those products are being designed for that target market. The third one is around customer service. So enabling customer service to realise the benefits of products and services, and also that customer services acts in the interest of the customer. And the last outcome being price and value. So prices of products and services are fair to those customers. Now, if we look at the actual added customer protections, too often banks have been implementing bad practices. So this essentially should stop those bad practices happening in the first place. It also means that companies will need to have to take more marketing opportunities to essentially make sure that those products are comms correctly and that customers understand them.
Okay, thank you so much for that. That's very interesting. So what steps do you think FinTechs can take to get ahead of the finalized policy statement And what's the proposed timeline for firms to comply?
So we're expecting finalised rules at the end of July, and actually the FCA has given a proposed implementation date of April 2023. So actually that's only giving firms 9 months to comply, which is a relatively short timescale for a significant regulatory change like this. I think there's probably 3 steps that firms can take. So the first one being proactively looking at your product management life cycle to make sure that customers' best interests are embedded in that product development. And it's not just a tick box exercise. So too often through a new product approval process, you will have to assess what the risks are with those products, but not necessarily looking at how that it is meeting customer needs. And the second being looking at what MI you currently capture, particularly to show how you've got good customer outcomes. And actually, there's some very helpful guidance that the FCA has given as part of both their data strategy and also their business outlook for the next 12 months. So how can you evidence that the product is performing correctly, but also that there's no potential customer detriment that could be occurring? And the third one being looking at holistically customer propositions and where there could be existing detriment in some of your product design. So too often we look at product in very much origination and then servicing. So actually looking at both of those journeys holistically and seeing where there could be improved customer outcomes.
Thank you, Victoria. Yeah, it does seem like a very short deadline considering all that they have to take into consideration. So what are the key challenges that they might face, the fintechs, with rule interpretation and implementing the changes?
So I think I would firstly say, good customer outcomes is open to interpretation. So, again, that could be interpreted very differently for different segments of retail customers, particularly if you are offering higher risk products and the clients understand the higher risk products that you're offering. So I think it's first understanding what does good customer outcomes mean for your business. The next one is very much a balancing act on how do you operate in the customer's best interest and not stifle innovation. So, for example, if you have got higher risk products with a higher return, are there other elements that you could essentially evidence you've got good customer outcomes there? And particularly because this piece of regulation is going to also include SME as part of its remit, understanding how that will affect more complex SME propositions rather than your standard, sole company SMEs. And then probably the last 2 I would highlight is understanding what the wider impact is to your business. So looking at things like your business strategy over the next 2 to 5 years and how this could impact it. Ops model, so like I mentioned previously, customer servicing, and also what technology and data can assist you in helping evidence how you're meeting good customer outcomes. The one thing that I would highlight in the current consultation paper, which hopefully the FCA will provide more guidance on, is what the framework is going to be for evidencing good customer outcomes. And very much it's likely that the good customer outcomes is going to need to have MI helping you evidence how you're meeting those outcomes. So, once those finalised rules have been published, looking at how technology can assist you with that.
Yeah, that's very insightful. Is there anything else you would like to add on the topic? Because if not, I'll pass it on back to Amanda.
No, I would just say, just make sure you're on the forward, foot to start thinking about implementation. And, if there are areas that you are concerned in your firms where you think there could be potential customer detriment, start looking into them now so that you can kick off your remediation programs.
Perfect. Thank you so much for joining us today, Victoria, and I'll pass it back to Amanda now.
Thank you, Carol, and thank you, Victoria. For our next topic, Christina Rea will discuss how to build a scalable compliance program. And for those who don't know, Christina Rea is the founder and CEO at RayCor Consulting, and she's the former Chief Compliance Officer at Binance US. Welcome, Christina.
Hi, Amanda. Thanks so much for having me today.
Yeah, no problem. Thank you for joining our panel. So obviously, around how to build a scalable compliance program, my first question for you is, what are some common compliance issues fintech startups often overlook?
So before we get into that, I just want to say FinTech covers all manner of products and services. I know it's kind of the hot topic when people think about FinTech right now to think about crypto and everything that's in Web3. But this also includes people that are really jumping into the space of lending and payment processors, peer-to-peer merchant services. FinTech is really a widespread definition. It covers everything. And it's really important for the FinTech to understand what its products and offerings are, because then it'll really help them understand what they need to get started. So to the question you're asking, what are some common issues? Honestly, some companies really don't understand what they're offering. You guys really need to know your product inside and out, because in order to get started with a compliance program, we have to, as compliance officers that are helping you, we have to understand the correlation between your risk appetite and your resources at hand. I've seen so many startups just sort of say, oh, we need compliance, we're not quite sure what that means, and just start tossing money at vendors and consultants without really understanding what they need. Certain products, certain jurisdictions that they want to operate in are going to be riskier, and that means that they might have higher costs associated. So budgeting for compliance is something people really don't take into consideration at the beginning. I've seen so many sunken costs around tech, not really understanding the vendors that they're onboarding and what they do, having consultants come in that maybe aren't the correct consultants for that particular product or service, or who maybe specialize in one type of compliance but don't know different kinds. That really makes it difficult to scale out the program. It's really important to find consultants and providers that are willing to work with you and really doing a deep dive into what products you're offering and like what your flow of funds is going to be. I also see that people really don't understand that compliance isn't just for the regulators at the federal and state level. It's also going to be for your business partners and some of your customers. Some customers are getting savvier with asking questions and doing their own due diligence to see what your compliance program entails. And if you are going to be working with banking partners, you're going to get really extensive due diligence lists and requirements to launch. And you need to have the right people and programs in place to be able to even get started if that's the route that you're going. One of the last things, and this is, I'm sure everyone here has experienced this, there's almost this fear around compliance officers that we're here just to sort of say no to new business and say no to onboarding. That's really not the case. A good compliance officer should be your advisor and should really advise you on what the risks are of your products and the places that you want to offer your products in. And they should be there to help you understand that compliance is so much more than just onboarding and KYC.
Yeah, those are great points. And I was just at a conference around FinTech as well. And kind of to your first point, a lot of times compliance professionals, especially in FinTech space, are just reactive and they just want to throw money out because they see other people doing that without really realizing what actually is the impact on their organization. So those are valid.
And then especially if it's a brand new startup that hasn't even hit like a Series A fundraising round, that's a lot of your budget for compliance already tossed out the window. So really understanding your budget and your products is really the best way to start scaling your compliance program.
Exactly. All right. My next question for you is just around what areas of compliance do you think FinTech startups have to consider?
I love this question because as somebody who's been in AML and BSA and KYC and sanctions and everything that touches that for over 10 years now, that's always what people consider compliance to be. And I love to educate people. It is so much more than that. It really can depend on the products and services that you're offering. Beyond AML, KYC, something every company has to consider is vendor management, making sure you're doing due diligence on all of your vendors and all of your partners. Cybersecurity, you need to have a CISO, somebody that's going to look out for data breaches. And this is not my area of expertise, but just years of working in startups, I know some of the things that they need in order to have a proper cybersecurity program in place. Data privacy and protection. I mean, there's so many cross regulations between the US and especially, if your company is doing business in Europe, GDPR is so important, and having people in place that understand what regulations apply in the US or the UK and the EU and Asia and around the world is super important. Consumer protection it's a whole beast. There's a whole alphabet of regulations depending on the products and services offered. So if you're offering lending products, depository products, credit products, there's all different regulations explaining what you need to have in place, what sort of policies and disclosures you need to share with your customers. Business continuity planning. I mean, I don't want to read off a list. There's so much. I mean, business continuity planning, record retention, broker dealer considerations if you're offering investments, which NFTs might be considered, fraud, which runs parallel to AML, but the red flags can differ, especially depending on the product type. And a lot of vendors out there really do distinguish between AML, KYC, and fraud monitoring. So that's kind of, the big ones, but like I said, depending on your product type, and I'm sure there's more that I'm not even considering in this 2-minute speech, please just be aware that compliance is so much more than anti-money laundering and KYC.
Yeah, I know specifically around data privacy. You mentioned GDPR in the UK and the US. I know it's a whole nother challenge because, there's not a kind of federal mandated data privacy law. So different states, I know Connecticut just released something, I believe California did as well. So having to kind of keep, depending on where you're doing business with, you have to keep tabs on what each state is doing. So I know that can be a whole nother challenge for organizations.
Yeah, a compliance officer, somebody coming in as the chief compliance officer, I recommend you look for somebody that has more than just AML experience. You can hire consultants to come in and do a lot of this other stuff. Nobody is one size fits all, but a real good compliance officer should come in and say, I know we need all these areas to be tackled. This is what I can do, and this is what we need to outsource.
Yeah. All right, my last question for you is, obviously there's a lot to consider all at once, especially for a brand new fintech. So what do you think brand new fintechs can do to prioritize?
So back to my earlier point, really start with having a solid understanding of what product offerings you're going to have at the beginning, and this will expand with time, and that's where scaling comes into play. You want to know who your target audience is going to be at the beginning, and you want to know what jurisdictions you're going to be offering your products in. Are you going to stick just to the US? Is it going to be Europe, UK? Are you going worldwide? Once you understand your products, you kind of need to know your risk appetite. Do you have the risk appetite and the resources in place to be able to handle riskier products like DeFi and yield farming or crypto, which it's still considered risky, but less so as people have more of an understanding of it. Once you sort of know all of this and have discussions with your compliance consultant or compliance officer around your risk appetite, that's when you really start getting your entire compliance program defined, outlined, and documented. And usually what that means at the start is getting your risk assessment, mapped out, getting your policies mapped out. If you haven't gone live yet, you're probably not ready for procedures. You're just really starting to document, what do we need? What policies are we going to have in place? And then operationalizing it comes next. And that can be taken in stages depending on when you're going to launch your products, what partner due diligence requirements that you're getting. And that's where you really start having discussions about scaling your tech and your resources based on your offerings, your projected transactional volume. And this really needs to be reevaluated at least every couple of months during your first year. Like I said, there's so many different kinds of fintechs. Some might have few transactions, some might have loads. You want to make sure that you have the right, reg tech in place, the right consultants, the right compliance officers in place. Regulators and business partners are not monsters. They understand that, especially for new startups, It can take time to move from policies to operations. So I always recommend, especially within your first year, if you have good faith efforts, if you start throwing some roadmaps down, this is what we plan to do in the next 3, 6, 9, 12 months, and you hire the right consultants that understand the complete program, and that it's going to look different at the beginning than it's going to look in 6 months to a year and beyond. That's really the best way you can get started and sort of take some of the fear out of being overwhelmed by having to do all this at the beginning.
Yes, thank you. This has been super insightful. And for our audience, if you have any questions for Christina, feel free to put them in the Q&A box and we may address them at the conclusion of today's webinar. Thank you, Christina.
Thanks, Amanda.
All right, I'm going to hand it back to my colleague, Carol, to go over the next discussion.
Thanks, Amanda. For our next topic, we're going to have Gemma Young, who will share how to forge collaboration between banks and fintechs. Gemma is the founder of Women in FinTech and the head of marketing at TechPassport. Welcome, Gemma.
Hello. Hi. Thanks for having me today.
Thank you for joining us. So, Gemma, I have a few questions for you. So the first one is, why should banks form partnerships with fintechs? What's in it for them?
I think it's more the question of why shouldn't they? I mean, I don't know why this division has happened. I can see historically how it happened because of how fintechs came in to start disrupting the industry. But at the moment, there is so much from them working together. And you can see that from the way that the banks are all setting up accelerators to try and attract the fintechs as well. And there's been so many positives from all of that. And what's been exciting for the banks is that they don't have to rely on their legacy systems anymore. They can start plugging into the technology that fintechs have to offer. And in doing that, they're forming some really powerful allegiances that the consumers are taking up at fast pace. So there's really not a reason that they shouldn't, in my opinion.
Yeah, I can certainly see a lot of benefit for the customers from these collaboration. So
and from both sides. I mean, quite often the fintechs, if they're startups, they don't have the platform to progress what they're doing to the greater audience, and the banks offer them that. And then on the opposite side, as I say, the banks are relying on a legacy system and can't necessarily move at the innovation pace that fintechs can. And by plugging in with them and partnering with them, they can also offer that. So I think it's beyond just the consumer, it's pleasing each part of the triangle.
Absolutely, makes sense. So what steps do you think they can take and they have been taking to forge this mutual collaboration?
Yeah, I mean, it's interesting to see that everyone's kind of gone down the accelerator route, if you like. You see lots of these accelerators that are in place at the moment. But what I think has held people back at the moment is that the accelerators tend to be individual ones that are attached to banks. And so there's very little being done from an industry standard where everyone's coming together. And when you think that actually in the partnerships that have already been formed between banks and fintechs and seeing how productive that's been, if the industry came together as a whole to connect, then I think that would be so much more powerful. And I really think that should be the next stage. And hopefully that's where people are starting to go. But what's been done so far, there's been lots of things. As I say, there's been lots of accelerators, lots of innovation labs. I work quite closely with Department of International Trade. So you see lots of delegations coming across borders as well to start doing connections, which is fantastic. So you see lots being done on the government side as well. Because there is obviously also the benefit that is from an industry sector as well, bringing people into the countries and so on. And really, fintech is such a global product and banking is so global, why keep it at one level? So there is lots being done and lots of different areas. But I think really the next steps, when you say what steps can happen to take a mutual collaboration, let's all work together, because that's the only way we can mutually all benefit to the next level. And that can be global as well, which is really exciting.
Yeah, that is great. So we talked about the opportunities, why they should collaborate, how they've been doing it. But do you see any challenges in the horizon? Is there anything? Can you comment on that?
Yeah, I mean, Christina commented on it a moment ago. I mean, there's so many different bits that are holding fintechs and banks back from working together. regulation being one of them, compliance, all of that does hold them back. There's lots of friction points. Some of it is even just the legacy systems and bureaucracy within the financial institutions, especially at enterprise level, where they have to go through so many layers of approval to even do a POC. Actually, on the opposite side, you've got fintechs that really can't afford to jump through those hoops or afford all of the compliance to get to that level. And what you're seeing is lots of fintechs failing before they even get there, just from trying to deal with one particular bank, let alone multiple. And so there's lots of challenges that are being faced, time being one of them. If you're expecting fintech to wait, say, 6 to 18 months just to onboard with a bank, that isn't necessarily the time that they can wait in order to onboard with a bank, and they don't have the manpower or the finances to get that far. So there is a lot holding back, and that's also seen by the banks, because banks are then being held back from innovating at pace, because they're also frustrated with those timelines. It's not like it's benefiting anybody. But those friction points, there's lots of things that are being done to work through them. You're seeing lots of procure tech in place, lots of marketplaces being formed, lots of accelerators, as I mentioned earlier, innovation labs. So people are trying to tackle it, and it is a problem, and there is a solution that is needed. And that's why I say it really does need to be everyone coming together to solve this next problem, because otherwise it's just doing it on micro levels here, there and everywhere, and no one's benefiting as a whole.
Absolutely, makes sense. Any additional insights you would like to share with our audience today?
Yeah, I think seeing those friction points, the only way that we can get to that next level is having conversations like this today, and realizing that it's not a bank problem, it's an industry problem. It's not a fintech problem, it's an industry problem. And actually, once everyone realizes what it's like being on the other side of the fence, and I'm lucky having been on both sides to see the problems, that if we solve it, everyone's going to be happier. And we've seen that from the beginning with Banks and FinTechs, as I say, starting to partner together. And the only way to take it to the next level is for the industry to come together and come up with a solution. So things like today are fantastic, communities are fantastic, because that's what creates the conversations that then starts the solutions. So, yeah.
Absolutely. I think that what you mentioned is really, really key. Communities, I think the word that resonates here.
Very much, yeah.
Thank you so much for joining us today. To the audience, if you have any questions for Gemma, please feel free to pop them in the Q&A box. And with that, I'll pass it back to my colleague Amanda. Thank you.
Thank you, Carol. For our next topic, we're going to discuss the evolving landscape of compliance in the crypto space with Valentina Poghosyan. So Valentina is the program lead of compliance testing and monitoring at Anchorage Digital. They're a full service financial platform and infrastructure provider for the digital asset space. Prior to this, Valentina worked for Meta's digital wallet Novi. And before that, she spent over 14 years in traditional financial services. Welcome, Valentina.
Thank you. Thank you, Amanda, and thank you to my fellow panelists and to the participants of the webinar.
Great. So obviously, crypto is a hot topic right now, and I know there's a lot up in the air around regulation across the US, UK, and globally. So I'm curious from your perspective, why do you think crypto needs regulation?
Right. So as compliance professionals in crypto domain, we often operate without a lot of clarity, though we do like clarity, and regulation can make it easier. Why do we need crypto? Why do we need regulation? First of all, is the use of blockchain. The use of blockchain in financial services is an explosion in weighting, and there are almost endless use cases for blockchain that will foster many transformations, including financial transformation. Now, if you think about the use of blockchain, we're talking about payments, insurance, blockchain for contracts, real estate, peer-to-peer transactions, supply chain management, you name it, cross-border transactions. We have started this journey already, and especially in financial services, we have made a lot of steps here. We do need regulation here to support us to maximize the benefits of blockchain technology. The second point I would like to highlight is the consumer confidence. Regulatory clarity is necessary to meet consumer demand. Anchorage conducted a survey back in December 2021 in partnership with YouGov, and nearly 40% of Americans believe that regulatory oversight would help cryptocurrencies gain acceptance nationwide.
Yeah, those are all valid points. And in terms of crypto compliance, what are some trends and topics that you're seeing right now?
So big shout out to Christina for mentioning that compliance is not simply BSA AML. I definitely agree with that statement. And I would just supplement it that BSA AML often takes the front seat. Now in crypto compliance these days, we're working on 4 major topics: travel rule, KYC, transaction monitoring, which would be more vertical points, and then another one, which is rapid control automation. With regard to travel rule, while there are a number of automated service providers in the area, nothing matches the SWIFT code from traditional banking industry. We are yet to solve the travel rule, especially for the unhosted wallet. So this is an area that the industry in general is working towards solving the problems here. The second is the KYC. With regard to KYC, we've come a long way. We are in a better shape. We have fantastic tools these days, right? We have the IDV tools, screening geolocation, face recognition. So far, gone are the mortgage files, paper-based mortgage files. Now, however, we need to come up with more innovative ways of having a robust structure, onboarding clients. I believe Gemma mentioned that sometimes it takes months and months and months to onboard clients in the industry. So we do need a more robust structure, KYC structure around that. Finally, well, not finally, the third point is transaction monitoring. So this is another area where the industry is still in early stages, whereas blockchain transactions are public and one can trace them through available tools that are free as well as third-party tools. Industry is still working on refining the investigation techniques and understanding the ecosystem better. Then the final point is my favorite point, which is the rapid control automation that spans across all areas of compliance. We're talking about third-party risk management, IT compliance, BSA AML, data protection, consumer protection, all of that. As more and more processes become automated, our controls automate, and this provides opportunities to have a robust controls framework through introducing key compliance controls, which is personally my dream, to have phenomenal automated compliance framework.
Yep, I agree with all those points. I will say KYC has definitely improved and enhanced over the last few years. Now, my next question is around what we should expect after crypto events in the recent weeks. And I want to kind of backtrack and say, can you please explain, I guess, from your end, which events you're specifically talking about for anyone who might not know?
Sure. So if you've been interested in crypto market or in crypto industry in general, you would have seen that there has been significant price drops in the industry. And that started with the events unleashed by Terra. Now, a lot of people call this a crypto winter, but it seems that there is in general a winter across the market overall. Now, we are charting toward a world where physical cash will become obsolete. We're going towards a place where fiatless banks will be the next evolution of modern banking, and stablecoins will make banking possible. But we do need a secure regulatory landscape for that. This potential can be unlocked if the industry and regulators work together and create a secure landscape for investment in digital assets. We don't simply need regulation, we need a regulatory innovation to create confidence in the market for digital assets. Regulators should bring under their umbrella applicable business models so that market participants can be protected and efficient markets can develop. If you think about the times before, the US has been here before in creating regulations for whole new industries. For instance, the Telecom Act, Digital Millennial Copyright Act in the mid-90s. And even after the financial crisis, we saw Dodd-Frank addressing topics such as systemic risk, resolution regime for failing firms, securitization, investor protection. So after the recent events, regulation should be top of mind, absolutely. And there are two topics that we should expect the regulators to focus on: consumer protection and investor protection.
Great. My last question for you is kind of based off of these insights. Have you seen the profile and jobs spec of a traditional compliance officer change? And if so, how?
Yes, we have seen it change tremendously. Gone are the days where traditional accountants or lawyers would occupy the ranks of compliance officers. The new compliance officer is a hybrid of an engineer, a data scientist, a lawyer, an accountant. It is so much more than a BSA and compliance, BSA AML compliance officer. We should also expect that most professions these days require people to have basic coding skills, and compliance professionals will be no different to that. So if someone on this webinar is looking forward to getting into compliance, they should definitely think about having engineering skills and data scientist skills.
Yeah, no, that makes sense. Great. Any closing thoughts before I hand it back to Carol?
No, I just thank you for the time today.
Yeah, no problem. And audience, again, if you have any questions for Valentina around crypto or anything that she addressed, as always, please put them in the Q&A box. All right, with that, I'm gonna hand it back to Carol to cover our 5th topic.
Thank you, Amanda. Thank you, Valentina. Very insightful. So next up, we have Alecia Chen. So she will discuss how to prioritize compliance for FinTech startups. She's the General Counsel and EVP of Operations at Climb Credit. That is a student finance company that helps learners advance their careers. Hi, Alecia. Thank you so much for joining us today. I noticed that you wear a lot of hats in your current role, so including General Counsel, Operations, that looks like a lot. So with all these going on, I can imagine it would be difficult to prioritize compliance. So I have a few questions for you regarding that. So how should startups, and how are you in your role thinking about setting up a compliance program, especially given that you often have very limited resources, but are subject to the same regulations as the bigger guys?
Hi, Carol, and hi, everyone. Thanks so much for having me on today. You're right. This is definitely a challenge. For me, I was the first in-house legal hire at my company. And so this one really hits close to home. I think for me, it was helpful, and this is probably obvious, but worth saying anyway, to sort of prioritize things based on risk. And so I know other people on the call have mentioned sort of a risk assessment, but I found it very helpful to kind of go through the key areas of sort of regulatory risk most relevant to our organization. And so since we are a consumer lender, for us, that tends to be things like licenses at the state level versus a bank partnership, things like the Truth in Lending Act, Fair Lending, UDAP. And so kind of writing out the main areas of regulatory focus and then kind of evaluating them based on the severity of the risk and the likelihood, that really helped me get my head around which ones to prioritize. Because it certainly can be overwhelming in these very highly regulated fields. I guess that also led to a more incremental approach. And I found that also a bit comforting when faced with so many things we could do to sort of do that sort of like risk-based prioritization and take things in that order. So yeah, I think just reminding yourself that you can't do everything at once. There are limited resources. Every little bit helps. And for me, I also did actually find myself surprised that there were more controls that already existed than I maybe thought there would be. And so I don't know if anyone else is in the same position where you're kind of the only legal compliance person, but it's a tough one. It can feel kind of lonely at times, but at least for me, I was surprised that some of the stuff that I didn't expect to exist already did on the control side. So I guess just to recap, incremental approach, prioritization based on risk, and then kind of be open to the fact that there may be some controls that are already there.
Yeah, absolutely. There's only so much you can do with the resources you have, right? So prioritizing has to be key. So my second question has to do with your functions, your different functions. So what kind of overlap do you see between legal and operations?
There's a lot of overlap. The operations piece of my role is sort of a new one. I've been in it for about 3 months now, and I've been in the legal role for quite a bit longer than that. So it's been nice because I've really gotten to know the company from a legal perspective, and now I'm sort of seeing it from an operations lens as well. So in terms of what we work on together, there's all sorts of things. An example is, any change to the flow of our loan application is something that the operations team owns, and that legal, of course, has to weigh in on and review. Others would be, anytime there's a complaint, the operations team has to respond to that, and legal has to work with them to review the language in those complaints, as well as any scripts used for interactions with our schools and with our students. So there's all sorts of stuff that the two teams work on together. I think for me, though, even maybe more interesting than like the overlap in terms of the day-to-day work is more around kind of the mindset. And going into this operations role, I had a theory that the legal and the compliance training and sort of way of thinking around kind of starting with observing and like diagnosing an issue and then identifying sort of the most optimized way to solve an issue would lend itself well to operations. And that's certainly been the case. So it's been really nice to see how that sort of way of thinking translates really well to things on the operations side as well, where we're always trying to find opportunities to be sort of more efficient. So that's been one really interesting learning. I think the other piece, though, is it's also been interesting to see what it's like to be on the side of those kind of requesting changes from the legal team and sort of pushing them. I have a lot more sympathy now for, the argument that like, oh, do we really need to do that? It's really slowing us down. So I find myself kind of being the one requesting those things now. And that's not necessarily a bad thing. I know a lot of us on the legal side try to be practical and commercial and like good business partners to everyone we work with. But I think it's really interesting to be in a position where I'm in, where I am the one kind of advocating for those requests, because it really does force you to think hard about what's really, necessary. And I think it's pushed me to be, the best business partner I can.
Yeah, I guess it does give you a very good perspective, having been in both sides of the process. My last question for you is, what has been the most unexpected thing about your legal and compliance function in your role?
Yeah, a couple things come to mind. One is the difference between sort of conceptualizing of a compliance program and actually sort of putting it in place. And, as I mentioned, I was the first legal hire, and it was very resource constrained, especially at the outset. And so I found myself in a position where I kind of generally knew what I wanted to do, but like was having trouble actually doing it. And we had a couple of consultants, and I think really in the end, it was when we got a full-time hire who was able to help us. And I think that doesn't necessarily need to be the case, but just really making sure that whoever is going to be putting the program in place really does have sort of the bandwidth and skills to actually go and build that program, which is definitely a different set of bandwidth and skills than what it takes to sort of think about what's needed. So that was a big learning for me. The other piece is around how much sort of time I've spent focusing on the world of, I guess, external affairs, going beyond strictly the regulatory focus. And of course, everything is so interconnected, but beyond just like the regulations and ensuring that we're complying with them, there's a whole web of other players, including governmental entities and politicians, Congress members, their staffers, consumer advocacy groups. And a lot of the risks that we've ended up identifying as being, things we need to think about as part of our compliance program are actually not even about the regulations themselves, but rather through kind of our interactions with some of these groups. And so I've kind of been surprised at how much time I and others on our team have spent thinking about those things and how to best, interact with these parties.
Thank you so much, Alecia. Is there any other tips or any other insights you wanted to share with us today?
No, thanks so much for having me. Appreciate it.
Thank you so much for joining us. Again, if you have any questions, please pop them in the Q&A box, and I'll hand it back to my colleague, Amanda.
Thanks, Carol. We're going to wrap up today's discussion with a topic around the top U.S. compliance startups with Sasha Pilch. So Sasha is a principal at FinCapital, where she was responsible for sourcing investments, maintaining board responsibilities, and adding operating value at portfolio companies. Prior to FinCapital, Sasha was the sales lead at Pinwheel, which is a venture-backed payroll connectivity API FinTech company. And she's also the co-founder of New York City FinTech Women, which is an organization with over 8,000 members. Welcome, Sasha.
Thanks so much, Amanda. Thanks for having me.
Yeah, no problem. All right. So instead of, I know we had traditional questions for the last topics, but we're just going to kind of give you the floor right now to talk about some of the top US compliance startups.
Yeah, great. So as Amanda mentioned, I have been in FinTech for a while, know a lot about the space from my FinTech women community, and previously worked at companies like Quovo, Plaid, Ramp, and Pinwheel. So I just want to highlight some of the top compliance startups that I've been seeing that are really adding value to FinTech companies and more broadly startups. So the first one I'm going to talk about is the top right-hand corner, so Lyca. Lyca helps FinTechs and other startups quickly build bespoke compliance programs. I met them back in 2020 when they still had a tiny office in New York. It's been amazing to see them flourish since then. I think one of the other reasons that I'm so impressed by Lyca is that they have a wonderful female founder, Eva Pittis, who did 23 years at Citi, worked her way up to be the managing director of IT risk and compliance. She then went and started a FinTech consultancy, helping FinTechs with understanding regulatory issues so that they could work with large FIs. And now at Lyca, they are helping companies become SOC 2 compliant really quickly, building tools to expedite the due diligence process, and also integrating pen tests, which are critical for security. The next company I'm going to talk about is Jumpwire. So after the compliance program is in place, Jumpwire is the type of company that helps other FinTechs maintain that compliance. So they enforce data security with no code changes. They'll sit in front of the client's existing database and then automatically encrypt any PII or whatever required data fields is in their data policy to ensure that they keep their SOC 2, ISO, PCI, and HIPAA compliance. Okay, the one I'm going to talk about now is on Fido. We have participants on this call from both the US and the UK. So one that you probably all know, like one of the best in digital identity verification. A company that has spun out of them. So one of the founding team members, Danny Hackerman, has now started his own company, just got into YC. It's called TrueBiz, helps to easily share documents like incorporation documents, which from my time at Ramp and Pinwheel, I know can really slow down the new customer onboarding approval or the due diligence process when selling to large clients like banks. The fourth company I'm going to talk about is NeuroID. So they do an excellent job of protecting against fraud rings and bot attackers. So they proactively alert changes in crowd level behavior. And then one last one that isn't on this slide, but I was talking to a chief information security officer yesterday, and he raised a very good point. There's a big blind spot in compliance right now, considering that so many FinTechs use open source code. And so there are now compliance FinTechs like Film that will search all open code sources for malicious code to ensure that that isn't following through to FinTechs and their clients.
Great, thank you. Is there anything else you want to cover around the topic, or anything else you're seeing from compliance startups, any trends?
I mean, like as the other ladies on this call have explained, like there's so much going on. What I'm really excited about is like what is coming next in crypto, and I think there's huge opportunities for B2B compliance startups to make a real big impact there.
Yeah, I agree. Thank you, Sasha. All right, so I think we're gonna skip the Q&A only because we are running out of time. But if you do have any questions for us or the panelists, you can send an email to insights@clausematch.com and we will try to answer your question. So before we wrap up, I do just want to quickly mention ClauseMatch is hosting a summer festival this year. You can use the QR code on your screen right now to learn more, and we'll send an email or in our follow-up email, we'll send more details around the festival as well. But essentially, we're hosting a lineup of exciting compliance events this summer. In a couple of weeks, we're going to be hosting a compliance digital think tank. In August, we're hosting a masterclass on ESG. And then in September, we're hosting a webinar giving kind of some highlights into success stories within compliance. So definitely take a look, check out the QR code or check out our website, clausematch.com to learn more. So with that, I'm going to wrap up today's discussion. I want to thank each of our panelists for all of their insights around the FinTech industry. And I want to thank each of you for attending. As a reminder, we'll send a link with the recording and presentation in an email that will go out tomorrow. So please look out for that. With that, I want to thank each of you and have a great day, everyone.